Vishwavir Ahuja, the MD and CEO at RBL Bank, on the show right now. Mr. Ahuja, thanks for joining in. Firstly, the operational numbers. Your Q2 was a mixed one, exhibiting strong growth trends, but saw some major issues on the asset quality front as well. Elaborate on that, please.
Look, first and foremost, I want to mention that the performance momentum of the bank has been very strong across all dimensions. And if you've observed our net interest income performance or other income performance, our growth in CASA percentage, and in terms of our investment in our franchise, in terms of branches, footprint, deposit expansion, and so on and so forth, I think it's all been very well. If I just put out the number of operating profit, which is the profit growth or a profit number before provisions and taxes, we grew 42% because of the growth across the franchise, as I just mentioned. So in many ways, you know, the entire franchise is strong, healthy, growing and profitable, extremely profitable. The issue is, as we mentioned earlier, around a handful of names in the corporate sector, not in any particular industry space or other. We have clarified in our detailed commentary that we don't have industry-related stresses. In fact, we've talked specifically about pretty much all the troubled or the sensitive industry sectors, and we have highlighted that our portfolios across are granular, clean, well-performing with no SMA at all. So, you know, that's the first part. So the stress, if any, is around specific corporate names, and it's just a handful of names, as we said earlier. And we have highlighted the particular spaces, sectors, and the nature of those companies in terms of their industry background, etc. And we've also indicated a quantum of, you know, how we have sized, you know, that level of exposure. We've also, you know, that number, we've also taken aggressive NPAs far beyond what we needed to take from a regulatory perspective. And we've tried to be very conservative, very prudential. And the intent is to basically, in this and the next quarter, pretty much take most of what we have recognized. And before the end of the financial year, you know, we should be back to normalized level of growth and profitability, which means entering fourth quarter of this year, we hope to have addressed and absorbed the impact of some of these challenges and revert to normal profitability and performance by the fourth quarter of this year.
Hi, Mr. Ahuja, morning. So can you be slightly more specific about where this large slippage in asset quality drop is coming from?
Entire stress book that you have just mentioned, that we have indicated at 1,800 crores, includes one new name which was not there last time, essentially owing to developments that happened after the last quarter, and, you know, relates to a significant name, you know, of a coffee group in the south. In addition, we have kept a buffer also of potential stress perhaps emanating from one or two smaller corporates. Yeah. And therefore, that is the attempt to make a very conservative assessment of the likely stress that can be there, you know, for a bank as a whole. Of that, a very significant portion, 800 crores or so, has been taken into NPA this quarter. And, you know, our normalized level of slippages are around 250 crores. And some of the other slippages are around our retail book, etc., which are again at normalized levels. So the additional number is about 800 odd, which is entirely from within this, you know, range that we have indicated of the stress book.
How has the bank performed in the retail as well as other segments barring corporate, and what's the guidance there going forward?
No, as you can see, even in the wholesale banking business, we grew at 11-12%. I mean, it may not be a very high level of growth, obviously because of the economic environment that we are in, but at the same time, there was growth there. On the retail side, the growth is of course phenomenal, and overall the bank grew 27-28% in this quarter year on year in our advances. The deposits grew 31%, and the CASA growth was more than 40%, to the extent that CASA percentage now has reached 26.5%, which for us is an all-time high. NIMs were at 4.35%, also an all-time high. And operating profit across the franchise, contributed by businesses across the franchise, including wholesale, pre-provisions, grew 42%. So, in that sense, the business and the profit momentum is across the board. And again, I repeat, there are no sectoral issues that we have. We don't have any stressed accounts in any of the stressed or the sensitive industry spaces, and these are limited to the handful of names that we've tried to already indicate.
Right. What was the impact of the corporate tax rate and benchmark linkage, and what exactly is going to be the impact of the DTA and other changes in tax?
So I think the industry is adjusting to the the new sort of rate benchmarks that are there, and I think we will also follow accordingly. So there's not much to comment there. I mean, that's the direction in which that's the regulatory guidance and direction of events. As far as the tax aspects are concerned, for us the impact has been negative for the first quarter. Yeah, so and therefore our effective tax rate this quarter is actually almost 48% because of the DTA effects. But from the next quarter onwards, I think it will start normalizing, and for the year as a whole, we expect to be, almost, if I may say, on parity with the previous effective tax rate. From next year onwards, we will gain, okay, in terms of the effective tax rates going down.
So how has the credit card business done? Because that really seems to be outperforming peers largely.
No, we've said in our detailed commentary that the card business is growing very well. In terms of the growth itself, we've actually acquired 3.2 lakh cards in the last quarter. It is now at 2.3 million cards, and almost 60% of the acquisition happens through our various card partners. And in terms of all benchmarks on quality of acquisition, the delinquency levels, and in terms of other aspects.
All right, Mr. Ahuja, we'll leave it there. Thanks so much for joining us.